You get a request for an audit for your insurance. Why do you need to do an audit for your insurance? This is Jerry Nicklow, Real Insurance Talk with Huff Insurance. And what we're talking about here is business insurance. There's a couple type of policies that most of the time require audits. And they're usually business policies. You're looking at workers' compensation policies, and you're looking at general liability or liability policies. The reason is the policies are based on an estimated premium. So workers' compensation is based on payroll. Accident or claims do factor in as far as your experience goes and can affect your rate, but the base rates are based on your actual payroll and your classification of the employees, or in other words, what they do. The amount of payroll is the main factor in workers' compensation insurance. So the thing is, I don't know what my payroll is going to be for the next 12 months. When I buy a workers' comp policy today, do I know what my payroll is going to be for the next 12 months? Not exactly. I have an idea what it's going to be. So I say I'm going to pay 3 guys $50,000 plus my salary is $50,000, so it's $200,000. Things happen during the year. People come, people go, people get raises, this, that, and the other thing. So at the end of the year, they have to do an audit or a verification, rate verification, to verify what you paid in or the payroll you provide at the beginning matches the payroll that was there at the end, and what you paid matches. So it's kind of like taxes, right? That's probably why they call it an audit. It works like a tax audit. I pay my estimated taxes all year long, whether it be through the quarterly estimates or through my payroll. And at the end of the year, come by April 15th, I need to file that reconciliation or my tax return to say, hey, this is how much I paid. I thought I was going to owe how much I paid in. Here's how much I actually owe, because here's my real income. So now I'm either going to get a refund because I overpaid, or I'm going to have to pay more because I made more money or my taxes were higher. So it kind of works the same way, except it's with insurance premium. And with general liability, a lot of times they can use payroll, but a lot of times they use your gross sales, which is your gross income before your expenses. And that's the only fair way to compare two companies is your gross sales, because company expenses and stuff like that are different. So if you got 2 restaurants, the only fair way to compare them for liability reason is probably the gross sales. So that's going to determine the risk. So again, they tell them I expect my gross sales to be $1 million this year. I go throughout the year. And at the end of the 12 months, I get a request to verify my actual sales were $1.2 million. Then I'm going to get a bill to pay the difference. If my actual sales were $800,000, I'm going to get a refund back. Now, only caveat is if you're with what they call an E&S or a non-admitted carrier, a lot of times they don't give the refund back. So you got to do your upfront estimate on the conservative side, because that's the minimum premium, the annual premium they quote. Say they quote you $1,500. That's going to be the minimum premium come audit time. So if you come back and say your sales were lower, they're still going to charge you $1,500. So you want to be conservative. If you come in higher, you pay the difference between the higher and the lower, but that's just for the non-admitted. They're not subject to the rules for the insurance commissioner. They got a blog on that of what is a non-admitted carrier, if you want to look it up. You just want to be conservative when you're estimating if you have a non-admitted carrier out there. And I don't know about you, but it's like taxes. I like to owe just a little bit or get just a little bit back. I don't like to get a big refund because that means I paid too much all year. And I don't want to pay a whole lot at the end because that means I underestimated, and I'm going to have to come up with a big check come audit time. So that's how audits work for your workers' compensation and general liability. That's a simplistic view. It can be very more detail oriented. And if you ever done an audit, please, if you have any issues or audit stories you want to tell, please let me know. You can leave it in the comments of this video. You can contact me directly, and I'd be happy to discuss our experiences and just talk shop, because I know insurance can be frustrating for a lot of you guys, but insurance is something that we love to do, and I love to do around here. And believe it or not, I love to talk about it. So if you have any questions about it, please give me a call. Give our office a call. Everybody here is knowledgeable, and we'd be happy to help you out. This is Jerry Nicklow, Real Insurance Talk with Huff Insurance. Thank you.